very good discussion with our energy group and how to support this area. So, Thomas, if you like, we can begin, the pretty much. I don't think it's a punctual. You're already 1 minute past, but we can begin right now.
Great, yes. So the floor is yours. Thank you very much, everyone.
Let me check this. Xiaong is here.
Here.
Oh, okay. Yeah, Xiaong, thank you so very much in taking your time. All right, ladies and gentlemen, and also speakers and discussants, and let's begin our very important and useful webinar for the topic energy insurance, especially green investment for SMEs and large-scale project. This is actually jointly jointly prepared by financial sector group and also energy sector group. And I greatly appreciate the key help from Thomas's leading role and together with the energy sector, the David. And thank you so very much, Chief and also energy sector chief and also our other colleagues who are putting a lot of effort to make this happen. And welcome everyone to this joint the webinar. And as for the housekeeping rules, and I would like to remind you all to mute your microphone and to use the chat for any which we'll take up at the end of the agenda during a Q&A session. And let us start, and let me greatly introduce are you hearing? Okay. Please to save bandwidth. Can you hear me? Hello.
Hello.
That the sound is breaking up.
Yeah, it's all good, John Q.
Okay, thank you. Let me, we experienced a technical glitch from the internet disruption right now. And let me greatly introduce Dr. Xiaohong Yang and for providing us today with her welcome remarks. Let me just quickly introduce her for just a minute. And Xiaohong Yang joined ADB's Sustainable Development and Climate Change Department as Chief Thematic Officer on 31st of March 2021 last year. Prior to this appointment, and she was the ADB's country director for Pakistan resident mission since early 2017, where she has led the ADB's operational knowledge and partnership efforts to build up key infrastructure institutions and reforms in the area of energy, transport, water, urban, agriculture, finance, social sector, and public-private partnership. We are very, very blessed to have our senior colleague, and Xiaohong Yang, and to give us welcome remarks. Please.
Thank you, Jung-kyu, Chief Jung-kyu, and thank you, Thomas. You guys are very, very generous. Let me quickly begin, and thank you so much, everyone. Welcome to this joint finance and energy sector webinar on energy efficiency and savings insurances. Today's presentation and discussion will look at how the insurance industry can de-risk green investment for SMEs and large-scale projects. The event launches specific webinars focused on identifying existing, developing new, and implementing green and climate-related financing solutions. Part of the wider webinar series supporting the financial system for net zero. Financing solutions can help design innovative financing models that contribute to mitigation and adaptation by promoting transformation to low carbon and climate resilient growth. This will really align ADB's investment, including both sovereign and non-sovereign portfolio, with Paris alignment objectives. So energy efficiency is essential to a low carbon economy, as we all know. It is highly effective and the least cost path. That is an excellent point because of the least cost part to lower global greenhouse gas emissions. the IEA, the International Energy Agency, has actually shown that energy efficiency measures could deliver more than 40% of the emissions abatement required to reach the Paris Alignment goals in a sustainable development scenario. However, there are a lot of barriers. As you know, the investment in energy efficiency are not yet big enough. Actually, it's quite small with a lot of challenges. These include like fossil fuel subsidies, one. Second, high upfront costs, which is much higher than many of developed countries can afford. Third, lack of access to finance. So we need the financial people to do some financial engineering to help it out. Fourth, higher perceived risks, because how do we this risk? It will become so important. And fourth, lack of trust in new technologies and competing investment priorities, as we all know, in a challenging time. Of course, lack of knowledge and awareness, and also we need more knowledge and experience sharing event like this. So ADB's finance and energy sector groups, they come together. Thanks for Jung-kyu and his team and energy team, very inclusive. Teams, they work together to set up this webinar on these models to explore ways around these barriers. What do we do? So we are very grateful to have our speakers, Nivea Metki. We introduced the energy savings insurance model developed by BASE, BASE, which was successfully implemented in Latin America and Europe. Paul Collin, thank you. If Paul Collin also could show the face, Nivea also could show your face. Paul Collin will present this energy efficiency insurance product developed by Europe, by the HSB, a subsidiary of Munich Re. And this is really fantastic. I'm also very grateful to Shindatha Gupta, co-founder of Smart Jaws, for joining us for his presentation on the potential challenges and risks of energy service companies market in India. He's already piloting that in India. ADB Ventures recently invested in Smart Jaws, that is a startup energy efficiency service company in India. Fantastic. After the presentations, participants, we actually really very much hopeful if you could actually explore the feasibility of the energy efficiency and savings insurance model. With the support of ADB, we are very grateful if you could just contact Tom's and others, so they can actually help you to integrate it into the ADB's member countries. So I look forward to the interesting presentation discussion today. So this is going to be a lovely kickoff to advance and accelerate ADB's contribution to net zero. Thank you very much. Over back to you, Jung-kyu.
Thank you so very much, Dr. Yang, and we greatly appreciate your very comprehensive welcome remarks, and you touched on many important points today. Actually, this joint webinar, has the origination of our own chief meeting discussion, and together with Priyantha and the energy sector chief, and how to support this energy savings and energy efficiency project, and from these more the collaborative work together with this finance group. So today it really, I want to join the welcome remarks and what Dr. Yang mentioned, and I want to say thank you so very much to our three speakers and also the two discussants, and understanding the time constraint, and let me quickly introduce our one of our first speaker here, and the energy savings insurance, and the topic is helping SMEs to access financing for green technology investment, and Libya Mithiker. And thank you so very much, Libya Mithiker, and for this the important the first speaker role. And originally from Brazil and currently based in Basel, Switzerland, is leading the implementation of energy savings insurance Europe program at BASE since 2018. And she's driven by the vision of a healthy environment and planet, and is enthusiastic about the energy transition to tackle climate change. Livia has gathered almost 15 years of international experience in the field and having previously worked for 5 in environmental consultancy in Brazil and at the World Bank Environmental and Natural Resources Department in Washington, D.C. And let me ask Livia and to speak and for the first topic for energy savings insurance. Livia, please come.
Thank you very much for the kind introduction. I just want to confirm, are you seeing my screen? Is everything working?
Yes, I can see that. Yeah, it is perfect.
Good. Yeah, so first, thank you very much for the opportunity of being here and talking a bit about the energy savings insurance model. And yeah, in this slide. Yeah, here it's just a brief content of the presentation. We're going to go through barriers for investment. Actually, I can almost skip those slides as kindly introduced by Dr. Young, and go through the ESI model and its elements and how it works, and the experience that we have gathered along the years with this model. So BASE, we are a UN environment specialized partner founded in 2001 with the focus of creating this bridge between public and private sector and to mobilize sustainable investments in sustainable energies. So actually, when we founded back in 2001, that was the goal. BASE stands for Basel Agency for Sustainable Energies. Since last year, we expanded our activities to include climate change solutions in general, as we have been working more and more with circular economy projects and agriculture and land use. So climate finance, things that were broader than just the energy topic. So this is a bit the history of BASE in the past 20 plus years. And much of what we learned about the financing mechanism and the business development, business models that we have developed really apply for climate change solutions. A little bit on the partners we work with, so UN Environment, of course, but then also multilateral banks, philanthropic organizations, and the big players, Sustainable Energy for All and GIZ. Yeah. So this is just a short snapshot of our main flagship program. So the energy savings insurance is one of them, but we do also have other models like in servitization with cooling as a service or energy efficiency as a service. And currently we also are launching the SET Alliance, so the certification for the Energy Transition Alliance. So it's also in this topic. But we also have models with remittances and with on-bill financing. This EcoFridge program is quite interesting, also innovative financing models we have been doing around. Yeah, here I'm a bit to talk about the energy savings insurance model. So as was addressed actually in the first few minutes, the barriers to energy efficiency investment, the high upfront cost, even though compared to a long-term expenditure, the high upfront cost is still a barrier for the investments. Here we can see how conventional equipment will be less expensive in the first moment, but the cumulative cost will really ramp up, and it won't be so financially favorable to make this type of investment. But still, the investments happen in the conventional ones and not in high efficient ones. And the one barrier that the ESI model tackles is really this perceived risk of the energy efficiency. So something that will happen in the future. So the energy savings that will come in the future, they have this factor of lack of trust, or I'm not sure, is that a promise from the provider that I need to believe in? And for SMEs, we see that the decision-making process of making the investment in one or the other solution is really based on perception. So many times when they know their business model, they know what they put in and what they get out. They have this notion of what is the expected return. And if something is perceived as very risky, they have very high expectations on the returns, but that is not necessarily the case with energy efficiency. So the savings, they come, but it's not that it can be compared to returns, for example, much higher, like in the stock markets or other high risk, high return investments that this decision maker might have. So a bit the history of the ESI model. So it was started with the Inter-American Development Bank in Latin America, so in Mexico and Colombia, where it is operational. So we got fundings from the Danish government to develop it. It was actually where it was born. And it was then expanded to other countries in Latin America. In Europe, BEIS got the funding from the European Commission to implement the energy savings insurance model. And we had this first phase with Italy, Portugal, and Spain as the countries we developed it. And since September last year, we got additional funding to expand it to Croatia, Greece, and Slovakia. In the meantime, many other countries have also been assessed for the potential on in developing the energy savings insurance model. And actually, the CAS Bank in Mongolia got the fundings from the Green Climate Fund to implement it. We are doing the technical assistance for the implementation there. And it's great to see the model expanding. And since the beginning of this year, also in Africa, in Morocco, with the financing from this philanthropic group, we are implementing it in Morocco. So it's also with BEIS. And along this history, so we gathered some prizes or some recognition, like in 2015 from the Global Innovation Lab for Climate Finance. The ESI model was also featured in this UNEP-FI publication of energy efficiency investment toolkits, and we were also featured by the Swiss Sustainable Finance compendium of financing low carbon economy. So the ESI model, so it's composed by these four main elements: a contract, energy savings insurance, the validation process, and a financing structure. It's many times it's confused. What is the ESI? ESI is just the insurance, but here we talk about the ESI model, which is this model. It's like a program that has this main component that we will go in more detail in the presentation, just as the overview. And yeah, we have then also a number of stakeholders involved. So technology provider, the clients, the validation entity, insurance company, and financial institutions. And just this to introduce how the ESI model works. So using the provider and the grade, the savings are guaranteed in the contract. And this contract is then signed by these two parties, but the contract is only activated if those two conditions are met. So the project needs to be validated, so the technical aspects by an independent validation entity, and the insurance, which is on the financial guarantee that the provider is giving to the client on the future energy savings, is issued. So giving those two steps, when those two steps are met, the contract is activated. And here we can also add when financing is approved, depending on the level of the involvement of the financing institutions in the model. And once the contract is activated, it goes to the implementation phase. Like any upgrades, the technology provider goes there, and the validation entity also verifies that what has been installed is in accordance to what has been promised, and the whole monitoring system is also in place. During the operation, the client benefits completely from the savings. So this is in the benefit of the client. The provider still gives the maintenance to ensure that the equipment is operating. That is a usual practice when there is a guarantee associated. So the provider can also be there to ensure the operation or the maintenance of the equipment is done to be able to achieve the future savings that were guaranteed. There is a periodic monitoring of the savings. So this is done by the technology provider, approved by the client. It can be that in the first year, the validation entity also validates the first year monitoring. But it can also be optional. So they play actually this role of evaluating the monitoring if there is a disagreement, if the provider is saying like, I achieved those savings and the client disagrees, those savings were not achieved. When it comes into this dispute, where there is the possibility of triggering the insurance, the validation entity plays then this role of coming in to settle if the savings were achieved or not. A fifth element, so this is one addition, especially for the implementation of the ESI in Europe, the management information system that we have developed, and it's managed by BASE. It's developed in blockchain, so it's to track and trace the whole process. So as we saw on how it works, there are many phases with exchange of documentation and information, and this is then tracked by this management information system that can record all the steps of the implementation of the energy efficiency project. But then also it has this benefit of the reporting, and I think all the stakeholders and even there put the question mark that could be maybe for reporting achievements and energy efficiency, emissions reduction. There could be many actors interested in that type of reporting that is tracked and traced and validated by an external entity. So each of the elements now, going quickly through them. The standardized contract, so as I mentioned, it's signed by the technology provider and the client. It is intended to create trust. It's also the way that we have been working on the several countries is that it's a very simple, like as short as possible, to be really understandable for SMEs and decision making. So making process standardized is also an advantage for scaling it up. So this is the idea as well. And there is where in the contract is where the roles of the different actors is also defined, and yeah, the validation process. So the independent technical validation entity has this role in those 3 plus 4 plus the fourth moment of the process to be participating in the project. The first year savings validation is something that we added in Europe. It was then also taking up in Latin America in the expansions of the model. It was not originally there. But yeah, so it's based on this protocol of the IPMVP, which is an internationally recognized protocol to measure energy savings, like what is the baseline and yeah, and here's where also in the validation process we can add the characteristics or any regulations from the country, specific from the countries, if there are energy efficiency standards or minimum energy consumption aspects for equipment. The insurance, and I think this is maybe the most innovative or the element that plays an important role in the model, is this participation of this additional actor, so the insurance. And here I think it will be a very interesting discussion in this webinar because of the different elements that we are bringing here to exemplify to you. The energy savings insurance is a surety bond. So surety bond is this insurance that is covering a guarantee in a contract. So it's equivalent to a bank guarantee. So in this type of insurance product, it's the insurance evaluating the technology provider and what type of promise or what type of guarantee is the provider giving to the client. So the evaluation is basically on the financial health of the provider and their capability of fulfilling this promise. So in the end, the insurance will evaluate the providers and will generate kind of credit line. And for each of the clients, the provider will have an insurance certificate that is equivalent to that amount that is guaranteed in the contract. So for the clients, they receive this insurance certificate, which is one of the conditional of activating of the contract. And with this insurance certificate, if the savings were not achieved, there was the arbitration process, the validation entity confirms that the savings were not achieved. With this insurance certificate, the client can go to the insurance and get get their compensation. Yeah, actually here I explained a little bit already on the insurance element. Here it's also interesting to see the importance of the validation entity to trigger the payment from the insurance. This also gives some level of security for the insurance, less of a risk, because they will only pay if the savings were not achieved. And one interesting aspect is that this type of insurance product, it usually exists in different markets, but not necessarily for this type of application in energy savings or energy efficiency contractual arrangements. And this is what we go into when we go for the implementation. This is the message that we usually want to highlight for the insurance companies, that it is not creating a new product. It is adapting a product that they already offer in the market. Yeah, I'll just quickly go through my last few few slides. The financing structure here, as I mentioned in the contract, it is between the client and the provider. So the project payment is in advance. The savings are benefiting the client, and the financial institution is then providing the credit to the SME, to the client that is making then the investments. Here, this is the very core structure. Of course, we can combine it with, depending on the country situation, with external incentives or other credit guarantees or something else. So actually, that is my last, almost my last slides, just to give a glimpse on the type of technologies that are included in the model. So very standardized model technologies that can also be adapted according to the implementation. So this is actually my last slide with the nutshell of the ESI model. Thank you very much.
Thank you so very much, Olivia. Actually, I really liked your presentation, opening our eyes to this, the new model. And I believe in this model really give us a lot of, the insights and also examples in the near future to us. And I'd like to, remind you that in the right side, there are 2 questions already from our the colleagues and Darshak and also Akma. So please, pay attention to these questions to prepare for engaging Q&A sessions later, right? Yeah. And then, this Livia session is really like combining SME finance and also the technology. It's really the new technology we badly needed right now for the climate change, right? And the green and climate change, and also economics and the economy. Maybe it's a very rigorous modeling and to talk about how these, ESI model is able to help. And then based on this, the insightful presentation, I think it is really the right time to move on to the next, the renowned speaker, Paul Cullen, and a little bit of different angle, but it is also very important in terms of supporting energy efficiency insurance. So this is the creating credit risk enhancement through energy efficiency insurance, and closely related to the first presentation to support SMEs access. So let us now, turn to Paul Cullen's presentation on energy efficiency insurance, which is a slightly different approach, but with a similar benefits. And, let me quickly introduce Paul Cullen. And Paul is the head of specialist risk at HSB Engineering Insurance Company and a subsidiary of the world-leading reinsurer Munhee Re Group. And Paul has 35-year experience in the engineering insurance sector. And he joined HSB in 2004, working in business development, underwriting, and product development roles. And Paul developed and launched HSB's award-winning energy efficiency insurance product in 2014. And we have a very honor to have Paul to share these insightful knowledge about the creating credit risk enhancement. Paul, are you ready?
Yes, I am. Hopefully you can hear me. So thank you very much for the introduction. That's much appreciated.
Go ahead.
Okay. Yeah. Well, as I've said, that there is more than one way to skin a cat, and I guess our approach to energy efficiency insurance is a little bit different. And I think there's certainly room for multiple models within this. Our approach has really been to focus on the energy service companies, the ESCOs who actually deliver these projects, and they are our focus and they are our target insureds here. And it's about how we can make them and their projects inherently more investable by using energy efficiency insurance. And hopefully we'll demonstrate that today. I'll very briefly go through the who are we, because you heard the introduction and there's not much more to add really. We are a specialist engineering insurance company. We've been around since 1866, so we've had quite a lot of practice now. And we are a wholly owned subsidiary since 2009 of the Munhee Re Group. So yeah, we've been around doing engineering insurance for quite a long time. And have a security rating of A++ superior from AM Best, which I think is the best that you can possibly have. So we're very experienced and very secure underwriting operation. This has already been covered by both Xiaohong and Livia, actually, in terms of the fact that there are significant barriers to energy efficiency insurance. So I won't go through these in detail. We've already been done much more eloquently than I could do. But I think, the general disbelief thing is quite a significant issue to overcome. And that is also plays a big part in the fact that what we found when we went to a number of energy efficiency and energy service company conferences was that there was a big disconnect in terms of getting access to finance. And I think a lot of that is because energy service companies and investors talk very different languages. One is the language of finance, the other is a very technical language. What we wanted to do was create a product that effectively acted as a catalyst between the two parties to bring them together so that we could make energy efficiency projects inherently more attractive and investable. So that was our driver behind developing the product. In terms of the sort of equipment and sort of occupancies that we are happy to look at in terms of energy efficiency, I think it's worth spending a little bit of time on that. I think what we're saying here is that actually we're fairly agnostic and open to lots of different opportunities. In terms of occupancy types, this list here that you can see on the left-hand side are all risks that we have written since 2014. So everything from commercial office, public buildings, hotel and leisure. We've done small residential. We've done street lighting projects in Spain, hospitals in the UK, industrial premises in Spain, hotels in Ireland. We've done quite a few bits and pieces. So we're fairly broad in terms of the type of locations that we are happy to insure in terms of retrofitting for energy efficiency. And the same is true also of the technologies and materials that are being installed as part of an energy efficiency project. So we'll do everything from the really simple stuff like LEV lighting retrofits, full refurbishments of heating and ventilation and air conditioning systems, tweaking of building management systems, right down to variable speed drives, and even PV installations as well in terms of local generation. So again, we write a broad range of technologies. We're not fixed on specific types of technologies or single technologies or any one particular type of building. We take every project on its own merits effectively. In terms of the product, Livia was describing the base product, which is basically a surety-based insurance. This, I guess you could say, is a more traditional insurance of indemnity. Because we're looking to cover the ESCO and the project in its entirety, we're covering a number of different areas here. It has 3 sections of cover, and the first 2 are really nothing special. They're available in all markets. The first is equipment damage. So everything that's fitted as part of the retrofit of the building, everything that's installed is covered against accidental damage and breakdown during the duration of the policy. So that's a relatively standard cover. The second section is revenue. We cover any revenues that are generated by those technologies that are retrofitted. Obviously, sometimes there are incentives for installing certain types of equipment, or some will actually generate revenue through electricity production or passing electricity back to the grid or whatever. So where that does occur, we are happy to cover the revenue generated by any of those technologies. The third section of cover, as I guess, is what makes it unique and makes it an energy efficiency insurance product. And that's asset performance. And what that does is cover any shortfall in savings anticipated on the project. Now, where I guess this differs from a surety is we aren't just covering here a guarantee to the customer from the ESCO. We're covering the complete savings that the ESCO is estimating they're going to achieve. As you're probably aware, a traditional ESCO model involves them effectively over-engineering savings in order to make their margins and to pay for the investments in the project. So, as an example, if someone is guaranteeing 15% savings to a customer, it's probably because they're expecting to make at least 25 to 30% savings. And obviously, from the difference between the two is how the ESCO makes their margin and makes their profit, and also enables them to pay for the investment in the project as well. So we cover the total savings rather than just the guarantee. In terms of how we deliver that, we do that for a single period of up to 5 years. And in terms of making claims, obviously equipment damage claims can be made at any point during the insurance period. But in terms of shortfalls in savings, the actual trigger for a claim is that simply that there has been a shortfall itself. And that is basically an assessment that's carried out at the anniversary of the inception of the policy. So every 12 months, we will look at the actual performance of the project. And just like Livia and Base were saying, we would expect the measurement and verification to be done according to IPMVP protocols, because that is an internationally accepted standard. And if there is a shortfall occurring, then the insurance will kick in. So there's effectively, if you had a 5-year policy, there are 5 opportunities to claim at the anniversary of the inception of the policy. We did that rather than wait until the end of the period, the 5-year period, and pay all of the shortfalls in one go, because obviously, cash flow is quite important, and certainly if you're taking on quite a big investment loan to pay for the project, you want to be able to pay that back regularly. So we do that as an annual event rather than waiting to the end of the full policy period. So that's how the policy is structured and how that works. So in terms of how do we actually assess a project? Well, I guess in some ways this is very, very similar. First of all, we need to collect an awful lot of data. So we need to basically send out we usually send out a data capture sheet along with receipt of the full project proposal from the ESCO. And once we've gathered a lot of data, so that we've obviously got all the baseline performance data and stuff like that, we will then pass it to to an independent assessor, an energy consultant, who will basically see and assess the veracity of the project itself. And the way we actually calculate our product and our premiums is we basically look at all of the energy conservation measures that are being installed as part of a retrofit project. So, and that could be a single technology, or it could be multiple technologies. We look at each individual energy conservation measure, and we basically create a triangulation of possible results. So we're effectively trying to create a triangulation of what's the best case scenario here in terms of it, if it works perfectly, what's the worst case scenario, and what do we think is the most likely performance. So we have those 3 triangulations, three points that we use for triangulating the results of and performance of each energy conservation measure. We then look at the correlation between the energy conservation measures, and those can be positive and negative. Quite often we see competing energy conservation measures trying to save the same piece of energy, and we all know that 2 into 1 doesn't go. You can only save the energy once. So we need to take those correlations into consideration. We've then created a patented algorithm where we put all of that data in, and then we carry out a large number of Monte Carlo iterations, and that basically calculates what we think is the average shortfall in savings that will occur in any one year. And we use that as a basis for then calculating our premium. We basically multiply that up to create a premium. So that's the process we go through. At the end of that, we're able to issue a quotation, preferably in local language and via a local partner. And then what you have then is effectively evidence that the project is insurance ready, and that will usually make it inherently more attractive to a potential investor. Here's an example of how energy efficiency insurance can improve credit risk enhancement. This is an example of actually, I think it was a hotel in Ireland, and regardless of the numbers here, which are specific to the case, what this shows is that you can take something which is probably suboptimal investment grade. In this case, if we assume that this is a BB- investment grade on the Standard & Poor's scale, then basically the chances of it actually performing to a higher level increase significantly if you have energy efficiency insurance compared to being without it. So if you assume that an investor wants at least a 98% level of comfort that it's going to achieve a certain investment grade, then you can see the difference. If we go along the column at the bottom to BBB-, there's still a 99.1% chance that it will achieve that level with insurance, whereas without insurance, that has dropped dramatically to just 30%. So using that 98% threshold, what you've effectively done by taking risk transfer, by taking all of the technical uncertainty of a project and passing it to a highly rated insurer, you've created that credit risk enhancement, which in this case is the equivalent to about three credit risk grades. So from BB- to BBB-, which then makes it investment grade. So that's the kind of impact that energy efficiency can have and how it can make a risk inherently more attractive. And then this is my last slide. Really just wanted to go through what the benefits of energy efficiency are. Now, there are usually, in an energy efficiency project, there are usually at least 3 people in that relationship, which isn't always a good thing, but in this case it is. And in terms of, the actual customer, the end user, what they get is obviously access to reduced operating costs and reducing carbon footprint, but also they have that confidence that the project being delivered by the energy service company is actually insurance backed, and those savings are guaranteed. In terms of the ESCO, they get a lot of benefits in terms of the assets that they have installed are protected, and the revenue that they generate, as well as the actual performance of the project itself. That, as we've seen, can create improved credit risk. And that leads to greater confidence both from the customer and potential investors. And then lastly, in terms of investors in energy efficiency, where energy efficiency insurance is in place, they have the benefit of knowing that the technical uncertainty around the performance of the contract has been removed. And because we're covering total savings, not just guaranteed savings, they can have that confidence that the loan repayments are also protected from the ESCO. What that produces overall is the reduced cost of credit, and that's something obviously that can be passed on to the ESCOs in terms of potentially reduced interest charges and better margins for the investor as well. So we think there are significant benefits across the whole value chain in delivering energy efficiency insurance. And that is the end of the presentation. So thank you very much for listening, and obviously we'll be happy to answer any questions when you have them later.
Thank you very much, Paul. Actually, I see the questions in the right chat box from Aru, and you can see that this questions for active engagement in our Q&A session later. So, I'd like to give my great thanks to Paul and for your presentation, especially for that, the energy efficiency insurance benefits. I really like that. And so we learned from our 2 renowned speakers, and for the energy savings insurance, the other is credit risk enhancement through energy efficiency insurance with a little bit of different angle. So now is the time to check that ask Siddhartha Gupta, and co-founder of Smart Jewels, an Indian startup ESCO company in which ADB Ventures has invested in. This is very interesting. It's ADB Ventures has invested in. What are the challenges in the Indian energy efficiency market, and if energy efficiency insurance could help them or not. So let me just quickly introduce Siddhartha. Siddhartha leads the central resources team, including finance, operations, and administration functions at Smart Jewels. And he was responsible for single-handedly managing the maiden 5 million fundraising round for the company in 2021, and is currently involved in process and technology implementation for the internal operations of Smart Jewels. Siddhartha, are you ready? Please come in.
Yeah, hi. Thanks for the introduction. Can you see my screen?
Yes, we are able to see that. And also your voice is very fine.
Perfect. Thank you very much, sir, for the introduction. So good afternoon, everybody. My name is Sid, much easier than Siddhartha, and I'm the co-founder of Smart Jewels. We as a company exist to eliminate energy inefficiency, and our target is to be able to eliminate 29 million tons of carbon before 2030. Now, some would ask, why is it 29 million? Why is it not 25? Why is it not 50? Well, the reason being that currently we are producing about 58 gigatons of carbon annually. The global agreed to target is to reduce this by 50% by 2030. And we want to be at least in the top 1,000 companies who help in achieving this target. So the next question is, how are we approaching this issue? We firmly believe that energy efficiency is a continuous process and not a one-time replace and forget activity. Proper design and equipment are precursors to providing efficiency, but without proper operations, the perfect design and equipment do not deliver the desired results. We are providing a service to over 40 large commercial establishments in India, and we have found a significant drop in energy efficiency every time our focus shifts from operations. So like earlier we couldn't figure out why this was happening, and then it kind of all made sense. The reason it happens is that every consumption. Oh, one second. Every consumption can be like a facilities consumption can be broken down into two different kinds of consumption. One is coming from static equipment and the other one is variable equipment. Now, static is very easy to solve for. You've got lights, fans, motors installed in any premises. You go and change your bulbs to LEDs, fans to BLDC fans, and voila, you get savings. The issue lies when you come to the variable equipment. These are complex interdependent machineries which are working together to cater to a dynamic demand. Now, to give you an example, in case of a commercial building which is air conditioned, somebody is going to be sitting in one corner turning his aircon to 16 degrees, somebody will be at 18, somebody is going to turn it off. And there's all this equipment working on the other side, like your chillers, cooling towers, pumps, AHUs, trying to kind of figure out how to best deliver this cooling demand working together and deliver it efficiently. This is where most of the efficiency occurs, and this is the problem which we are trying to tackle. And every time we say that, okay, this building is stabilized, and now we can shift our focus and go to another building, we find that there's something happened to the cooling tower and something happened to the pump, because of which we are not being able to deliver the cooling efficiently. So it's a massive problem which we face on a daily basis. Today, we are a team of 130 people which are focused on solving this inefficiency in variable equipment. Now, if you even think about, if you go away from chillers and you think about compressors, in any industrial settings, they use compressors. And the variable demand in compressors, that some machinery is going to use 3 kgs of pressure, some machinery is going to use 6 kgs of pressure. And this compressor system sitting there trying to figure out, okay, how do I run to be able to cater to this demand? There's efficiency or inefficiency all over the place. So what we offer is 2 simple systems. One is a Joule-based system where this is an ESPC contract based on a bill-to-bill comparison. We don't get into too much M&B with our customers. We say, okay, we look at your historical consumption as denoted on your electricity bills. We'll make that the baseline. We will come and do all the retrofits that are required, and we will check your future consumption that is denoted on your electricity bills. We will compare this to your historical, and whatever the savings are, we will charge you as savings. So we don't get into a whole M&B protocol where we say, okay, well, how much was the chiller consuming earlier? How much was this light consuming earlier? Not at all. We make it simple. We say we'll do a bill-to-bill comparison. The second model is a cooling as a service model. Over here, this is predominantly for newer buildings where we are guaranteeing a certain efficiency per ton of cooling that we provide. We have 3 revenue streams in terms of the capex that we invested, the O&M that we overtake, and the third one being the efficiency that we are going to be deliver. So both models, we've tried to keep it simple for the Indian context because we don't want to get too much arguments and arbitration at a later date. Now, doing this, till today, we've been able to save enough electricity to electrify over 1.26 million homes, have saved about $15 million for our clients, and about 85,000 tons in carbon emissions. So this number till today has been small because earlier we had 1 contract, 2nd contract we were building up. But today, on an annual basis, we are saving over more than 80,000 tons. Our footprint is across India, and we are operational in 12 states. Over here, 12 states, 18 cities, 42 sites, and delivering 35% savings. This is not something that we wanted to do. We didn't want to be so spread out all over the country. We would have rather focused on a region, but there's an actual reason why we had to do this. Now, you look at EESL, which is a very large ESCO in India. They're at $200 million in revenue. We are the 2nd largest ESCO in India who are just to focus on efficiency services. And we had $5 million or $6 million in revenue. Now, given this, given this small size, even with this small size, we had to go all over India to get this kind of revenue because there were not enough customers anywhere. Like nobody wants to adopt the service. There are questions always asked where, okay, whether you'll be able to deliver services, whether you'll be able to provide efficiency, then questions are saying that you will not be able to do it in our context. And where people have been willing, we have been unwilling, saying that, okay, this guy is not going to be able to pay us on time. So for one reason or the other, to find the right customer who will pay and pay on time, we've had to go all over the country and find a certain kind of marquee clients who will be able to pay. So how can insurance help in our context? Our biggest issue, like it hasn't been an issue so far, but as we expand, our biggest issue is going to be payment default. Today, we are only dealing with marquee customers. Like if you talk about the Indian context, it's the largest hospital chains in India. They like the payment security issue does not arise with these guys. But as we move from the large customers to the MSME industry, I don't even know how we're going to sign a contract because sanctity of a contract in India is kind of non-existent. And enforcing your right over here can take like decades. So we can deliver on the efficiency, but to actually get paid, to be able to pay back from the to the bank is going to be a challenge. So that's a reason why we haven't gone to the MSME sector till now, and we've been contemplating how to reach there. Even when you come to large commercial customers, very often the question that is asked is that, okay, so you're going to provide this efficiency solution. You are guaranteeing us 15%, 20% savings. A, how much money are you making? And B, what is your cost of capital? So what they are trying to get at is that, okay, if I'm charging them a 12% or 15% kind of interest rate to be able to provide the CapEx equipment that we are providing earlier. So, of course, the solution in itself has to be able to pay for the interest. So there is an interest component in there. And when you go to banks, they charge you 11, 12% interest, and the entire project becomes expensive. So the smarter kind of bigger corporates understand this, and they are always skeptical in signing a contract, just citing that the interest cost is too high. Even if the efficiency side makes perfect sense to them, the inbuilt interest cost does not make sense to them. So if there's some kind of insurance, it would really help to kind of expand the market, bring down these costs, increase the access to capital. Now, access to capital is another very, very, very big issue, because all efficiency projects are kind of predominantly funded by debt. Now, in India, we've been doing this for 6 years now, and the only place that we have been able to raise debt till today, even after doing 42 contracts, is from one entity. That is Tata Power or Tata Clean Tech. Not Tata Power, sorry, Tata Capital, Tata Clean Tech Capital. Besides them, we've visited HDFC, ICICI, SIDBI. SIDBI runs a scheme called Partial Risk Sharing Facility, which is somewhere similar, like it's something similar to insurance, where they guarantee the lender to pay them if we are not able to pay. Even though SIDBI provides this guarantee, it has been next to impossible to get any bank to agree to lend to us, even based on this guarantee. Now, the reason being that you can't actually blame the banks. The reason is that these guys cannot, they do not have the teams in place to be able to say, okay, whether this project is going to work, what's the technology risk over there. And the second one being that the market is so small that they don't want to allocate resources to be able to lend to this space. So how insurance can help over here is that if it can solve the payment problem, it can increase the size of the market, it can enable the banks to be interested to be actually lent to the market. So it's like so one thing kind of solves for the other. The biggest problem is just increasing the size of the market. The last one, as we grow, this is another problem that we're facing, is equipment performance and breakdowns, which also Paul covered in his presentation, which I was very glad to see. But what we are facing is that OEMs, they claim something at the time of selling. Like for in our context, we bought a few chillers from multinational OEMs. And if claim performance is 0.6 IKW, but when we actually install it site, we are not even getting like 30% of that performance. Now you can keep going and knock indoors, but nothing happens. So if there's insurance over there, as we grow, this will be extremely, extremely helpful. I think that was the last of my slides. There's an abrupt ending, but thank you very much for your time and thanks for the opportunity for the presentation.
Thank you very much, Sid. Actually, very interesting examples, and also how can, especially the role of insurance in not only the, increasing the size of the market itself, and also it's really, what you said is touch my, the brain and heart, and it's one thing actually solves the others. One of the examples you mentioned in that the foreplane. It is very interesting and also very excellent, the presentation. Many insights we learned from the actual business cases, and including your challenges and also the current contract issues, and also that the interesting point about the sanctity of the contract. I think it's all are very, very insightful, and we learned a lot from the actual business practices. And so now it's a time, and to learn from our two expert colleagues, listen to their opinion and the comments, and based on these three excellent presentation. So let me introduce, we have two discussants, the ADB colleagues, and first is Giacomo and the other colleagues is David. So let me quickly introduce the Giacomo first. And Giacomo is the principal financial sector specialist in the public management and financial sector in the trade division, Central and West Asian Department, we call CWRD. He joined the ADB in 2013 in the East Asia Regional Department and covering the finance sectors of the PRC and Mongolia, and moved to CWRD in 2020. And prior to joining ADB, Giacomo was with the International Monetary Fund, and having last served in Indonesia as senior advisor, focused on financial sector stability and supervision. And also his experience is pretty much ample, and in banking, capital markets, and financial stability, supervision and risk management in over 20 countries across Asia, Americas, Europe, and the Middle East. And we are very, very grateful and for Giacomo, who does not spare his effort to participate and give this excellent learning opportunity to us. And I'm honored to introduce Giacomo, my colleague. Giacomo. Are you ready?
Yes. Okay. Thank you.
Go ahead.
So yeah, I give a little bit of background because we were trying to deal with this as we put together a project these last number of years in Kazakhstan. So, and this was one kind of element we were looking at, through supporting SMEs with green technologies. You've got clearly is listed all the kind of complications or impediments to try and implement green technologies. You might call this is like, instead of having supply chain issues, you've got green technology implementation chain issues. And it just spans from the beginning to the end. What we find, which I'm sure is equal across other countries, as well as what we found with Kazakhstan, there's really a big lack of understanding of even what green technologies exist, what they can do, if they're viable, if it's just stamped green, but it really isn't. What is this kind of this whole sector? That's a key problem, even a starting point to even, I would say, invoke or implement these kind of solutions. In part, with this, I kind of raised that, it's obviously also the providers. There's a big, vast pool of providers and who's trustworthy and not. So so a little bit, I'll do that. I'll raise a question, not to be answered now, but it can go on later for the Q&A. But as part of this kind of, as I said, this vast pool of technologies that are that are not well understood, is whether some type of kind of pre-approved green technology list, would be useful to help implement this type of solutions. This can be adjusted ongoing as new technologies come in place, as more understanding of different technologies come up, as more confidence in certain ones are coming, into place. This especially maybe not for larger, companies, as was mentioned, like for the Indian example, or where you have a bigger build out of something with a hospital chain or something bigger, but into SMEs, where they could feel confident. They go to some list, they see a couple of kind of pre-approved, maybe qualified green technologies that they could implement in their small project, and that's already a starting point. And then they can go through this and ensure that there's insurance in place and whatever other elements. So I think, maybe this concept of this kind of pre-approved list would be useful, especially for SMEs. So that's something we can, seek the inputs from the speakers in a bit. You move on to even just this lack of trust, obviously. I mean, there's with green technologies, there's lack of everything. So just lack of X and fill in the blank. So, lack of trust, buyer beware as to the technology, the provider. Do you have confidence in what they're claiming? So, and within this whole sector. So this was something we brought up in our kind of pre to this webinar, a small discussion. I mentioned that, what's kind of the starting point if you wanted to really implement this insurance scheme, what would be the starting point? So there's all the elements are explained, which are fine, and it's clearly needed. But, if you take the parallel example, like you wanted to fund the startup, tech companies, you'd need some seed capital, right? So some type of little incentive seed, to get this whole thing going. So what would that be, for setting this up? What is that? Is there some type of a seed capital, some type of seed to kind of get this thing going in a country, from that kind of, especially dealing with SMEs. So I think that's kind of important to bring up and raise and see what we can do for that. The other point, even if you have these technologies in place, especially when you're dealing with SMEs, I mean, of course, they don't have the capacity to handle that risk, right? They're making an investment. It may sound good to them, over 10 years, they're going to save so much. But even without green technologies, SMEs have limited capacity, as we all know, to handle all sorts of risks, that they have to deal with in terms of volatility of the revenue, customers, all of these issues. So let alone, dealing with the added kind of uncertainty for green tech. And then, linked with that also, especially I would say when you get into maybe these smaller, companies, not the big corporates, but SMEs, trying to do this, you have, kind of human input, human error, human impact, right? I mean, you can invest in something, they can pick up some, chillers, boilers, something that are going to be better efficiency. But, how would a program like this, these insurance schemes, or from the insurance, the HSB insurance and so forth, and even into the, the discussion we had from the ESCO in India, deal with that human impact? They misuse the technology. Some other, they've got a brand new chiller, but some other, the backup generator is old and it short circuits something. That element is a key part. And of course, if you have a bigger project in place for a corporate, okay, that can be easily kind of looked at as a whole and that. But when you get to SMEs, I mean, you can't force them then to say, we're not going to insure or take care of that one, technology for you because other ones are not old. So let's upgrade everything. I mean, this is kind of the 3 points I want to raise. Really, I think we have to, for in a practical sense, especially dealing with SMEs, really try to address. So I bring that up, and when we get to Q&A, hopefully the speakers and others can comment. So that's all I've got right now. So I think we'll pass it on to David, see add some inputs too.
Thank you, Giacomo. Actually, I thought that it's 4 points, but actually you said it's 2 points. And, I think it's a very practical points and, learn from your projects and,
including that the pre-approval, the list and lack of trust, and also that the risk issue to SMEs. And that is one of the reasons why we began with the Libya about that, and how to help SMEs to access financing for green technology investment. So we would like to have a more different discussion at the Q&A. So it's the time. I want to say thank you to Giacomo. It's a very good point. And then to turn to another expert colleague, David. David is a senior energy specialist at Asian Development Bank, and since November 2021, and he provides operational support to regional and the private sector departments and contributes to knowledge work on emerging, especially new technologies in the energy sector. And prior to joining ADB, he was senior energy policy specialist at Asian Infrastructure Investment Bank, and also previously, David worked at the International Energy Agency's Energy Efficiency in Emerging Economies program to scale up, help energy efficiency activities that can generate economy-wide benefits with the governments from major emerging economies, including Brazil, India, and Mexico. So it's the time to turn to David. Are you ready, David?
Thank you, Junkyu. I hope you can hear me well, and thanks for the introduction. It's a real pleasure to be here in this session, and I think talking about a very important topic, and one that might have a huge impact in the energy efficiency market, and where ADB can play a major role. What I'll do is I'll give you a bit of sort of my experience here, highlighting some of the key ingredients. So it's a bit of like a cooking lesson on energy efficiency markets, but also then seek the points of view from the speakers. And I'm hoping I'm covering one of the questions that Arup also put in the chat box, which I think is very important. So for an energy efficiency market to grow, you basically need two things. And in my view, it's regulation and incentives. And from the ADB's developing member countries, the most mature energy efficiency markets today, I believe, are India, China, Malaysia, Thailand, and Vietnam. And Philippines is a country that maybe we can look forward to in the next couple of years, particularly if they've just approved their new Energy Efficiency and Conservation Act, and if that is implemented successfully. But you might be wondering why these countries, why are these the ideal markets for energy efficiency, including for energy service savings insurance? And I believe there's like four basic ingredients, and it'd be great to get the speakers also to get their views. And these basic ingredients for a successful energy efficiency market. And the first one is enabling policy environment and regulatory framework is really important, that sets targets and actions. And these can be establishing an energy efficiency policy, setting requirements for industries and large commercial buildings to have energy management plans, certification even of the ESCO companies. And as we've sort of discussed a bit, and I think Giacomo mentioned, is having a legal framework for energy savings contract enforcement as well. The second one is on economic incentives, or at least a level playing field. And this is a challenge for many of our DMCs, or developing member countries. So, for example, you'd have tax rebates to reduce high upfront cost of energy efficient equipment. There's many of our DMCs have fossil fuel subsidies or electricity subsidies, which sort of impact a level playing field and should be removed and directed to the most vulnerable and poor communities. Thirdly, creating a market demand. So, and this can be through consumer awareness, like we heard, and as well as public sector procurement. And for example, you can have state-owned utilities or public procurement that could play an important role in creating energy efficiency market demonstration projects, and even setting ESCO funds. And this has been done in a couple of countries, including Malaysia and Thailand. And the fourth one is private sector participation through financial intermediaries, as we're talking today, and ESCOs, as we have Sid here. And they're all important players to deliver the energy efficiency investments across all sectors and monetizing energy efficiency and creating these new markets. They have the technical expertise and they can take over risk and financing. And we can't forget also the national development banks that are potential partners for ADB to consider for on lending to energy efficiency. Overall, it's important for ADB to work with both government and private sector to ensure that necessary ingredients are in place. And this is the case today that I'd like to highlight in South Korea and Malaysia. In South Korea, very quickly, the government created the ESCO market in the 90s, introducing energy conservation policies, providing tax credits for ESCO projects, providing long-term and low-interest loans for ESCO companies and building owners, setting up an energy conservation fund, and also supporting ESCO project certification so that these ESCOs could seek loans from financial institutions to support government procurement and demonstration projects. So in 1992, South Korea had only 4 registered ESCOs, and within 8 years, they had a total of 159, and today they have about 250 ESCOs. In Malaysia, just to conclude, Malaysia Debt Ventures, which is a state-owned technology financing entity, provides credit and financing for energy efficiency technologies, including for SMEs and ESCOs. The government established a fund which pays credit guarantees from the Credit Guarantee Corporation for up to 80% on unsecured portion, up to a ceiling amount, of course. So similar to the question for our group in the chat, it'd be great to get a quick view from the speakers on what are the key ingredients for energy efficiency market, energy savings insurance to grow. And if Olivia and Paul would have any suggestions on which ADB markets are developing member countries we should tap into. Thank you.
Thank you very much, David. I think that actual examples, the countries, South Korea and Malaysia, and also those 4 other points, enabling policy, regulatory environment, and economic incentives, and also the creating market demand, private sector participation. It's really useful. We learned a lot today from our colleagues, but it is the time we have been waiting to engage our active question and answers. And I cannot wait to engage this one. This is pretty much exciting time. And when you look at the right side, and there are meeting chats, and actually the chat box has questions. Initially, the sum of questions looks like until that. Right, we have the questions, Darshak and also Akmal, Stefan, Wayne, also Togun, and also the Arabs question it looks like pretty much for Libya, and about that, the helping SMEs access, and including that underperformer, how we can handle that, right? And so I think Libya probably is ready to engage some of the responses. And can you do that right now?
Yes, I do have a large list there. I don't know if I can provide more information in written afterwards, but yeah. So the cost is an important element of the ESI implementation, because the validation and the insurance, they add costs. So our role at BASE also is to negotiate so that those costs are kept as low as possible. We estimate that it's around like 5% of additional costs, so for the validation and for the insurance, but those are usually reflected then on the proposal that the technology provider gives, so it is part of the financing. And ideally, this additional cost is not jeopardizing the energy savings. So this is where we need to find the balance. Yeah, so the participation of multilateral development bank as financial institutions, yeah, we can frame an ESI program with the support of multilateral development banks, like we have done in Latin America. That the IDB providing funding for second floor banks, so development banks in the countries that then provide the credits or the funds to commercial banks. So this is one option. And
can you, Olivia, can you share that example actually that you just mentioned, and working together with the IDB providing credits?
Yeah, so the IDB funded the implementation of the ESI model in Latin America with the funds from the Danish government. So in Mexico, for example, they worked with development bank FIRA, focused on the agriculture sector, and in Colombia, nevertheless, I think the final bank. I think I had it on my slides. Maybe it's a commercial bank that is then facing the clients, the SME clients, and it might have gone through the National Development Bank. So now I don't know exactly if the IDB can lend directly to the commercial bank. Yeah, Bancoldex in Colombia. Yeah. So this actually touching a bit on the question from Giacomo, how to start an ESI model implementation. A program definitely needs some technical assistance because of the engagement of several stakeholders, and this might be also I think one important thing, touching also a bit on the other questions, like that is the enabling environment. And I think what David was saying, that it is this combination of a strong regulation, but then also the incentives. At the ESI model, we try to be in between there, also making it a very good business case for all the actors involved. So for the provider, that it's being able to increase their sales in this type of product, receive the payment in advance, as we saw from Sid's comments. The clients that do not pay are many times a problem, and for the insurance company, it's also a new business, and for the financial institution. So we try to make it a win-win. So not going just with the stick, but also making a very attractive carrot for moving the donkey, the energy efficiency donkey. Maybe if I can allow others.
Yeah, question raised by Token, actually, what's the penalty to the underperformed solution provider?
Yeah, so given the surety structure, the insurance will go after the provider to recover the funds if the insurance is triggered. Yeah.
Oh, okay. So there is a sort of, you know, the contract content in terms of the, you know, the chasing that underperformer, right?
Yeah. Yeah, but as Paul also mentioned, like the guarantee that the provider will give will usually be something that they feel comfortable guaranteeing. So if they expected 30%, they will guarantee 20 or 15, and that's where it should be something comfortable for the provider as well to give.
Okay, thank you. And then let's go to Paul. Paul.
Yeah, I mean, in terms of the environment, Livy's absolutely right. It's about carrots and sticks, really, and initially I think we've seen a lot of carrots being dangled, and I don't think that's necessarily worked terribly effectively. Certainly, our experience in the UK is we've had that enabling policy framework that David spoke about around minimum EPC ratings for commercial buildings and private rental buildings, and ever increasing minimum levels of performance being acceptable. But what we haven't really seen is enforcement. And as a result, I don't think it's really been taken that seriously. And that has certainly affected the take up and demand for these sort of solutions. I think we are now increasingly seeing governments starting to wave sticks and threatening sticks. We're seeing it in Germany, where now commercial property owners will now pay higher tax rates on buildings that are if they own buildings and portfolios that are inefficient. And we're starting to see the same in the UK in terms of ramping up the minimum sort of acceptable performance levels of buildings in the UK. So I think obviously the other big market demand mover here is energy prices themselves, and I think in some ways that will probably be a bigger incentive than the regulatory framework. Once if people's bills are doubling overnight, then suddenly energy efficiency, whilst there might have been a bit of disbelief when prices were at more normal levels, I suspect there'll be less disbelief that you can say once they realise that there are even more significant savings to be made now. And also, the other thing we're seeing, of course, is an ever increasing with particularly large corporations, wanting to show that they have really good ESG credentials, for investor purposes and things like that. And so, making your portfolio a property portfolio more energy efficiency is a very easy and direct way of showing that. So pressures around ESG credentials, I think, is probably another factor that's now starting to increase demand.
Thank you. Sid, you want to add up your responses?
Well,
some of the points about the market,
Well, Paul is completely correct. The market is opening up. In the recent past, we are flooded with demand to reduce consumption. But somehow, I feel that it's becoming more and more difficult to do. Another big problem that we are facing is that the energy prices, well, Paul is saying that they're going up. In India, they're actually coming down because of solar. So earlier, there were all these distribution companies, and now people are buying from solar companies, and they're only paying wheeling charges. So the landed cost of electricity at their premises is actually going down. So that straight away eats up into efficiency, right? They say that, okay, I was wasting $100,000 earlier, I'm wasting $40,000 now, so maybe it doesn't make sense for me anymore. But other than that, there are lots of companies. This ESG point is completely correct. A lot of companies are saying that the investors are actually demanding them to do efficiency projects. A lot of our clients we got because their investors, the PBGs of the world, have made them sign contracts with us. So that is a very that's an encouraging thing. As more and more private equity or venture capital is coming in, people are getting more conscious. This carrot and stick approach, I completely agree with. It needs to be there, but enforceability is extremely poor. Like in India, if you look at the PAT scheme, Perform, Achieve, Trade scheme, that has been out there for the past 4 years, 5 years, there have been a lot of certs, e-certs have been issued. The trading is minuscule, and in today's date, it's kind of like for these large companies, it's easy for them to get these certificates. So it's not really helped. I think along with a stick, there needs to be proper enforceability of the stick. And where we get stuck, like in over here, there are lots and lots and lots of regulations, but there are lots and lots and lots of ways out of those regulations as well. I think the easiest way to solve for this, or to solve a lot of problems, would be do something that I've got who'd recommended, that was to have a separate, like, judicial body kind of for efficiency, performance contracting, or anything related to efficiency, where that could be extremely helpful. And that really don't know what else to add.
That is very okay, very useful from the market perspective on the increasing of the markets. Actually, when you look at the right side of the question chat, and Arup actually asked, what are the key challenges of the popularizing energy savings insurance in Asia, and also state of the insurance market development and issue? I think it's pretty much consistent in terms of the theme question. So here I want you to provide your quick, sort of the responses on what MDB has to do, based on these key challenges. And actually, one of the objectives why we are having this session here, webinar session is here, is what ADB has to do and how work together with the private sector, and also how to work together with the public sector, and to help the SMEs to access financing for green, the new technology investment in the various ways. So, for the question Arup raised, key challenges and state of insurance market development and these kind of things, and what MDB like ADB has to do. And, you know, I think that is a kind of time conscious wise, and maybe the last question we would like to, you know, to quickly share and your responses, you know, before we go to our final the closing remarks. Maybe, you know, Livia first, and you want to share your views on that?
Yeah, yeah, I think the ADB can play a very important role because of the power that comes with lending money, for example, and even the access to technical assistance types of funds. So I think there is a lot of room for of seeding this enabling environment, but then also creating those market opportunities for this private sector. Yeah.
Thank you. And then let's listen to Paul.
Yeah, I mean, answer's very similar, I guess. It's you know, my experience is very much Europe rather than Asia or Latin America. But I guess in terms of the early days, where I saw some success was, for instance, in somewhere like Spain, where they took there was active partnership between local banks and the European Development Bank in terms of basically European Bank was matching them pound, you know, or euro for euro, I should say, not pound for pound, euro for euro in terms of capital availability for investment in energy efficiency. And I guess it's those setting up those local partnerships and just getting people in the habit of actually getting them into that comfort zone of lending money for these projects. So I would say probably, you know, local partnerships and maybe, you know, euro for euro or dollar for dollar lending would probably be a good way of starting.
Thank you very much. And then let's listen to Sid.
Well, it's very simple. You have to give the ability to the ESCOs to kind of take on risk without penalizing them for no fault of theirs. The technology provider does not. So ESCO's job is to provide a solution, and he's dependent on a lot of outside agencies, whether that be a bank, whether that be the OEM supplier, whether that be an operations guy to kind of bring them all together and provide a solution. Now, all these dependencies because of all these dependencies, ultimately what happens is if the project does not perform, ultimately whether that's an insurance company or a bank will come to an ESCO to say, okay, hey, you owe me money. And an ESCO suffers for no fault of his. He's designed a solution based on a guarantee from an OEM, based on a guarantee from the actual consumer saying that, okay, if he delivers savings, he's going to get money. He's put in his own money, his own guarantee over there. Something goes wrong, everybody comes to the ESCO. We faced this problem in one contract where we were delivering 30% plus savings. The guy refused to pay us because they were going through financial trouble. We had taken money from Tata Capital for this project. Tata said that you have to pay us the money. It's not our problem whether this guy is paying you or not. And if we had not repaid Tata Capital on time, our ability to raise further debt for other projects which were paying would have just gone away. So what we had to do, we had to pay from our pocket, the Tata Capital, and then kept fighting with this guy to take out our money from them. So we don't have any kind of leeway in terms of not paying on time. So we are kind of like shock observers in the middle, always going chuck. And at this scale, it's still all right. But when the scale increases, it becomes more and more difficult. So if somehow the ability to take on more risk can be given, then the market can increase tremendously.
Thank you very much, Sid. You know, actually, beginning from Libya's, you know, wonderful, excellent presentation to Paul and also the Sid, you know, the sheer experience, reality facing ESCOs. I think we learned a lot, and not only for the the business focused knowledge and also the modeling work, but also the actual business challenges. And especially I wanted to say thank you very much. You guys talk about the MDB's role, and including those the collaboration, partnership, and technical assistance in creating the markets. And I think we learned a lot from you guys, and thank you so very much. In view of the time, and I'd like to hand over to our Energy Sector Group Chief, Priyantha, for the closing remarks. And Priyantha is currently the Chief of the Energy Sector Group in our SDCC, Sustainable Development and Climate Change Department of ADB. He has over 30 years of professional experience, and it doesn't mean he is old. He looks very young still and sharp in knowledge and experience. And his experience includes 14 years in ADB. He was director of South Asia Energy Division prior to the current position in August 2021. And before joining ADB, he served as a founder, director general of the Public Utilities Commission of Sri Lanka and the senior professor of electrical engineering at the University of Moratuwa. And he's very, very renowned scholar and also my colleague. And let me ask and Priyantha to come in to give us the closing remarks. Priyantha, come in, please.
Thank you very much, Junkyu, for very generous introduction. I look very young. I'm not as young. Yes, thank you very much. Thank to all of you for this very interesting webinar. Sorry that I could not join from the very beginning because I had another overlapping G20 event, again, something to do with energy access, which we are really, pushing for in our part of the world. So, dear colleagues, I am sure that that was a very interesting session. We would have gained insights from insurance industry and how we can support energy efficiency markets in developing countries in Asia and the Pacific through innovative approaches. Of course, energy efficiency is at the core of ADB's new energy policy. There is no doubt that ADB can and should do more, particularly on the demand side energy efficiency. We have been looking at supply side energy efficiency a lot, but not so much on demand side energy efficiency. Energy efficiency can deliver multiple benefits, as all of us you have heard now, help address three of the most important topics for countries in our region. First, energy efficiency can reduce the impacts of high energy prices and helping address energy security concerns due to global energy crisis. You can very well see that these days, in particularly where I sit now, I'm in Sri Lanka, and they are suffering a lot from energy prices, and energy efficiency really, helps these countries to get out of that messy, high energy prices. And the second, it can help countries meet their climate change goals through low carbon energy transition. Finally, it can contribute to countries' green recovery from the pandemic by creating new markets and jobs. Energy efficiency insurance is specifically designed, as all of us heard, for energy service companies and large energy saving investment projects. It provides cover for assets installed as well as the revenue generated by projects and shortfalls in energy savings each year. Both products have a credit enhancement function as they protect the loan repayment, which should allow competitive credit conditions and favorable loan tenants. Energy efficiency investments not only support low carbon emissions, but are also an important element in the economic recovery from COVID-19. Energy savings insurance has been successfully introduced, as I understand, Latin America and in Europe, and it provides an excellent unique opportunity for ADB and the countries in Asia and the Pacific for us to bring that experience here. I understand that opportunities are already being explored in places like Mongolia and Kazakhstan. The energy efficiency insurance also or guarantee schemes have been already implemented, and we have experience in Republic of Korea and Malaysia. We also see huge potential for energy efficiency insurance in India. As you know, ADB has quite an extensive involvement in energy efficiency in India, and as of course the Indian presentation made very clear here. The Indian energy efficiency services market is growing rapidly and could become a multi-billion-dollar market similar to the United States and in the PRC. ADB could be a forerunner and deliver high impact by developing the Indian energy services market promoting energy efficiency insurance finance model. In fact, this experience can even spill over to the neighboring countries like Bangladesh, Sri Lanka, Nepal, Bhutan, and so on, which can benefit from Indian experience and Indian energy efficiency market. ADB managed funds such as the Asia Pacific Climate Finance Fund, a multi-donor trust fund established by ADB in 2017 with Germany, that would be prepared to consider funding a knowledge product leading to a pilot. ADB managed funds have been set up to support just such financial risk management products implemented alongside climate projects. This webinar thus is a very successful kickoff and offers a valuable basis for further follow-ups. On behalf of my colleagues, DG Bruno and Chief Jun Kyu, I would like to express our deep gratitude to all the speakers for sharing their time and knowledge. Thank you, Olivia, Paul, Sid, Giacomo, and David, as well as, of course, my colleague Jun Kyu and Thomas for taking the initiative and organizing today's events. Thank you. Thank you so much. It's a long closing remark, but I have to take more time because I was not in the seminar from throughout. So thank you. Thank you so much.
Thank you very much, Priyanta. Actually, your closing remarks really kick us, to think about the follow-up discussion and suggestions. And we would like to introduce, to ADB the innovative ideas and turning into the concrete actions. And we look forward to continue to step up efforts. And great appreciation, special thanks, and should be given to our colleague Thomas and also David and the Energy Sector Chief Priyanta, definitely, and also the renowned speakers, Livia, Paul, and the Sid, and also the very experienced experts and our colleagues, Giacomo and David. And also I'd like to say thank you to our colleagues and who put questions in the chat box. And I think we exchanged very exciting sessions today. So we are looking forward to the working together at the next round of the discussion. And thank you so very much. And please have a great day or great morning and to great evening and around the world. Thanks a lot. Bye-bye.
Thank you. Bye.
Thank you.
Thank you.
Thank you very much. Take care.
Thank you, Thomas. It was great.